People are just kind of worried, like, is it going to work? Right. And I always say, like, first of all, real estate's a generally safe bet. And then self storage, I think it's like a 93% success rate. And we merged the two of them. So some people are still like, is it safe? So the misconception is just worry. And I try to navigate them through. It's like, hey, look at my property, cash flowing, and this is a stable asset class, iOS, self storage. So just showing them the data and the history helps a lot with that.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins. Today, I'm joined by Mr. Chris Long. He's the founder of Long Yard Storage, an international leader in large-scale storage solutions. Chris took a problem he faced as a contractor and turned it into a thriving real estate business. We'll dive into how he built Long Yards, why industrial outdoor storage, aka IOS, is booming, and how investors can get involved. Here we go. Chris, welcome to the show. It may be our second attempt here today, but this is it. This is the one. We're going to get it, right?
We got this.
Man, welcome to the show. How does it feel to be Chris Long today?
Feels great. Every day waking up like Chris Long is great. It's a good day.
That's awesome. So tell us a little bit about you and your journey. First of all, for the listeners who don't know who Chris Long is, give them a little brief summary of what that means. But I'm excited to talk about this thing that you've got going on, this storage thing that's a little bit different than what I've seen. So welcome us to the party. Tell us a little bit about Chris.
Yeah, cool. Appreciate it. So, hey, Canadian raised, now in the US. I was a carpenter and licensed carpenter, got into construction and was scaling, got into real estate. I was doing smaller, turning houses into duplexes, and then discovered two problems at the same time. As a contractor, I needed a smaller storage yard. It did not exist. Took that, problem with my real estate experience and then created Long Yards, which is basically contractor yards for contractors. And now that's what led me to the United States, and we're scaling and just getting on podcasts, letting people know who we are and what we do, because we require partners to grow. And it's a little bit about Long Yards. Basically, for listeners, like, what is contractor yards? Think of, it's quite literally, in my location in Canada, I have a 10-acre yard. It's 200 feet by 2,000 feet. And on both sides of the road, it is contractor yards, fenced in, cameras, power. You got 67 yards on a 10-acre lot. So it's like self-storage, except there's no roof and it's a fenced-in yard, and you've got your stuff for equipment for contractors. Anyway, so now we're scaling that internationally.
Oh, wow. Wow. So I love this, the idea of an opportunity being birthed from a problem, basically. I love this when we take these little pivots, and now for you going from a contractor into this storage world, and it's really cool. So it's hard for us on the outside to understand this. So I'm going to walk through a few of the questions first. That's actually my background. My background is architecture engineering, construction management engineering. And what that is, big fancy words for, I had a tool belt and I smashed my fingers, right? That's what I did. So I can understand some of the need for this, but my mind is going a bunch of different questions, the business side of this thing, the investment side, growing the investment. But first of all, let's walk us through what is this yard? Like, what, as a contractor, what do I need to put out there? Why do I need a storage without a roof on it?
Well, first of all, let me back up. The reason this problem persists is because if you're just going any Crexy, LoopNet marketplace, put in land for rent, what you're going to get is 1 to 5 acres. And you can only rent an acre. And in most cases, it's not secure. And it's 3 to 5 year triple net lease. All right. So there's a big gap in the marketplace. It's trying to find a yard, 2 to 20,000 square feet month to month, that is fully secured. And a lot of, not only just contractors, there's a lot of logistics companies, operations companies, small businesses that need a space like this. So if you kind of like put into that box, it really broadens the horizon. I say contractor yards because most of our clients are small business, service-based businesses like contractors, but there is a horizon of other services that really need this space because it doesn't exist.
Yeah, so I can even see like logistics for staging, stuff like that. You're talking about operations, so it's really neat. The fact that it doesn't have a roof, also very interesting. And I'm looking at pictures of the yards, and you've got, it's secured, so you've got chain link fence around it. You're using some material, some almost like blue netting material to keep those separations kind of private, like what you've got going on in there. All right, so we've got these yards, and it looks like you have found a way to take this property, vacant land. Are you having any issues like with access? Where do you need easy in, easy out? Like, tell me a little bit about how you're acquiring the property that makes it good for the renters to say, hey, that's a great spot for me to put my yard in.
Yeah, it's interesting. So one of the unique things about long yards and the contract storage yard model is that, first of all, you don't really need, you just need power, right? It's not, give me power and that's it. I don't need water. We don't need all the other utilities. Literally, it's power. And what's unique is that unlike truck parking, they need a lot of space. They need to get like almost a 210 feet turning radius. We could give me an odd, messed up, laid out, weird creek looking Z-shaped property and we will make it work because we have less roads, less turning radius, and just more versatility with our model. And our yards move around. So we have an adaptability model. So with that, there's just extreme versatility. And the reason why we have to get creative like that is because we have to solve multiple problems at once, not just for the unit economic of a tenant, but actually for landowners, because price per acre in some markets are extremely high, or it's just an oddly shaped piece of land. So we need to get creative with how we go in there. We need to maximize every square inch. So that's what we do.
So we've talked a lot about storage, but most of the time you say it's a roof. And even these days, we're seeing a huge increase in the need for this stuff. But this is kind of like going a different direction because the increase that we're seeing, it's getting more bougie, where I got to have temperature control. I got to have, bathrooms and all of this stuff for these storage things to get place. Long yards is kind of like that opposite direction. You're saying you only need electric, right? You don't need all this other bougie stuff. What do you think's driving this increase in need for this kind of space?
Well, it's simple. It's supply and demand. It just doesn't exist, right? So like me as a contractor, I could not get a small yard. I had to build it and create it. And the problem is, like, as a small business, you don't need, first of all, you don't want to spend, a 3-year lease, but you also can't afford like a $500,000 or $2 million property just to store your equipment. You need something in the middle. So that's what's squeezing the supply and demand. It just doesn't exist. Where like self-storage, a lot of people know about it. It's getting a little more, I wouldn't say completely saturated, but there's definitely a lot of eyes on it. So you go to like the market economics and there's a lot of people looking at self-storage, but the supply and demand is huge, but also the clientele for storage yards. Look, guys like me, blue collar guys, we get stuff done. If my self-storage facility is like the door's not working, I'll fix the door. I'm not going to write an email to headquarters and CC the CEO and file a complaint and formal written notice. It's like no. We just get stuff done. These are my clients. And these are the guys that operate our facilities. So it's a big gap in the marketplace, but these are the type of guys that you want. They just get stuff done.
What's been the biggest challenge for you taking this idea, right, and turning it into now? And I even see the F word on your website, franchise, right? So how do you even take this idea and get to the point where you're at now with it?
Right. So actually, it's funny. I got to remove that word from the website because we went to more of a partner model. I was franchising for a few years. Now we do have franchisees, and it's still a great model. But we pivoted to a partnership model. And regardless, one of the reasons we did that is because we have two big problems to answer your question. One, obviously, like most businesses, this is a capital-intensive business. We need a lot of money. And the other thing we need is partners, right? So long yard storage got approved by SBA. If you go on the federal government and you look at Longhorns, long yards is right underneath. So we can now acquire land to lease or buy only using, 10% down. We just closed on a property in Corpus Christi, Texas, using 10% down for industrial land. Like that, anyone in the market just like trying to buy land for 10% down with a cash flowing business, like that in itself is unique. So we're solving this problem by collecting partners, using the SBA funding, and going and getting great deals. And we use that through what's called a go long or go home, right? A little spin on it. And people secure territory. It's only $5,000 and they have 14 days. We give them our tools. We help them find a deal. If they don't like what we have to offer, we give them $5,000 back. And since we open that up, we just have the floodgates open, people coming in and say, hey, is my territory available?
Wow. Wow. Okay.
Yeah.
So to me, I'm almost hearing franchise piece there, but it's definitely more of the partner. So you're offering the model, but partnering directly with the person, basically.
Right, because they're so far and few between. Like franchising is made for like smaller, more affordable multi-units where, part of my learning curve was like these deals are really hard to get. I just don't want a small percentage. I want to put more. I want to get more out of it, but I got to put more into it, which is fair.
Mm-hmm.
So we partner and we put our money into the deal as well. So we put our money and we do a profit share on the real estate. So that's how we're doing it.
And in that situation, when you partner, are you still leveraging your economy of scale when it comes to the operations of that specific site?
Yeah, exactly. So there's two ways to do it depending on the location and the partner. We get different types of partners. Some of them have large portfolios and they're like, look, you manage it. That's fine. As long as the brand manual is still being followed, we have our checklist with our SOPs. So, but we can manage it. Or if we want, you hire, when I say you, the partner hires a manager and they just make sure they're following our systems. So it's as long as it's being managed properly to our standards, then that's what we care about.
What's been the biggest challenge working with in this structure, working with a new partner? Like say I'm a partner,
Yeah.
What's been a challenge that has been pretty typical?
Yeah, I would say it's educating them on the commercial real estate component, right? So let's say you're a doctor and you have two practices, but you want to get into commercial real estate. Well, you need to get comfortable doing two things. One, signing the lease, which you probably do for your practice at one point. So somebody knows it's a personal guarantee and it's 10 years and you got to fit it up. So there's some experience there. And then obviously signing for the loan for SBA, which also requires personal guarantee. So one of the biggest challenges is bringing people up to speed to be like, hey, beggars can't be choosers. And I say that because we're chasing a hard asset class with typically multiple bidders, or there's a lot of eyes chasing industrial real estate. So if I have a new partner that says, well, I don't want a PG and I don't want this and I don't want that and I don't want to risk any capital, well, okay, then you're not getting a deal because you're not going to get everything you want. So there's an education gap that I find with a lot of partners that we've been working on bringing them up to speed. And we've altered our process to avoid any hiccups with that. Now it's like we have a deal and it's like you got 3 days to figure it out. You're either in or you're out, and then it goes to the next person. Mm-hmm. Now, for clarity, if you're hunting a deal in your backyard, in your territory, that's fine. But if we bring you a deal, you need to be ready to move because the deal ain't going to last forever. And typically, the terms are the same. You need to personally guarantee the lease. You need to understand commercial lease language, and you need to get ready to sign on the loan documents. And there's soft costs with just risk capital that needs to go out there. So a long way to answer the question, but it's getting partners familiar with just the world of commercial real estate. But we've been improving that by doing the method. We educate them, and then when it comes time to crunch, it's like it's time to go, and they know there's people behind them. So it creates a little bit of incentive.
And when you mentioned a PG, it was just a shortened piece of personal guarantee, basically saying, "Hey, we're going to break the corporate veil," meaning that I'm putting my personal assets up for collateral for whatever it is we're doing. And you said PG on a lease. Now, how would a partner be PGing a lease?
Well, any lease that we're seeing, a landlord's in most cases requiring a PG unless they have like a large security deposit.
So you're leasing property in order to do this?
Right. Well, we're doing both. Yeah. So for clarity, we could do land arbitrage, right? We could lease, and because there's so much value creation in our business, we go put up the model and then we split the delta, right? So we don't have to just buy land. We can lease land or partner with landowners. So we have more tools in our toolbox to get a deal done.
Here's a fun question. Do you have a per acre or per square foot cost to set the model up?
Well, it's really dependent on the market because per square foot cost you can spend is based on how much you can get in your area. So we've built a feasibility tool that literally allows you to put in several metrics, and within a minute you can identify if a property will work based on metrics we've built, and it's super user friendly. So we can train anybody on these tools, and that's what we do. And that's what the go long, go home is. So, just like someone who's not super familiar, loves the concept, it's like laundromat for land when you kind of think about it. It's just a recurring billing. It's a beautiful model. But there's different tiers of land. Different tiers of land have different net rentable square footages. They have different income. The long yards build out is pretty sticky. That stays around the same, but the site work could vary substantially. And you got to justify how much you can spend. And the only way you do that is to know how much you can make. And part of that process is to get into the long yard circle. And it's an education process. Like, this is how we find out, this is how we look at it, this is the lease up rates. And that's just part of, getting people on board and teaching them how we do things.
Yeah, and that build out in my mind, like the two drastics is like, okay, I've got this swamp, and then okay, I've got this cliff. Yeah. Like there's a huge range of difference there of what you can be done. Not everything's flat, not everything's ready for
the topography,
the long yard.
Difference. The strength of the soil and the distance of the quarry are two things that can break your deal. Just two things out of a checklist that we have. If your quarry is an hour away and you got a lot of stone you're trucking in, well, these things just increase your costs. You just 10x your site costs. And now you haven't even put a piece of stone on the property. And if your soil's too weak, right, well, then now you need to put a big base. So, with our experience, and because we've learned the hard way on a lot of properties, and I mean, we've lost a year and a half just with certain items on our checklist, partnering with us kind of like eliminates that. I'm not going to say we're perfect, but we're learning every day, and this is all we do every day. So, like topography, is one of the many things that change substantially your project cost and timeline, which increases your carrying cost, which increases your risk.
Interesting. And you mentioned doing this internationally too. Tell us a little bit about the challenges that you've faced, like trying to pick up this model and put it somewhere else.
Oh my God, that's a whole podcast itself, but like, it's crazy. I mean, first of all, I'm a dad of 3 daughters. My wife and I, when long yards worked in Canada, it was like an aha moment. You get those sometimes. You're like, okay, this is wow. And then we're like, we're going to sell our house and go all in. So we did that. We didn't even have a house to rent, and we were packing, going to Florida. My daughter was a month old, right? So we're just we're done with Canada. We are going all in. When you believe, you burn the ships to get to the island. That's what we did. So part of the challenges came with like immigration and everything else that a lot of people kind of don't, a lot of people talk about a big move, moving states, like, no offense, that's easy, move countries. And even for me, compared to like third-party immigrants, I still relatively had it easy because, we had a nest egg and a business backing us. But, there's challenges on the personal side. But then from the business side, I built this whole franchise model in Canada, and then I'm all ready with my FDD and everything. And then I get to a partner. I'm like, okay, I'm going to submit my FDD for a new territory. And like, oh, no, you need to redo everything in the United States. I'm like, wait a second. I just spent like 6 months and like 6 figures in Canada. And no one ever told me that you need to redo the whole thing for the US. So, I mean, there's been massive learning curves from the way real estate's negotiated, obviously just like state laws, construction in Florida has so many learning curves. So, I mean, I can go in a world because we're vertically integrated. So we do acquisitions, construction, management, lease up, partnerships, capital, everything. So yeah, it's been great though. Now, like, I have a good knowledge base and I've learned a lot. So yeah, a lot to unpack there.
You said FTD. What do you mean by that?
So FDD, so franchise disclosure document. So any franchisor,
FDD, okay,
has an FDD, and it's just basically like who we are, how we work. And I mean, that's a lot of capital and time to build those out. And that's, if anyone's claiming to be a franchisor, if they don't have an FDD, they're full of fluff. So immediately, in any case, that's an FDD.
Okay, cool. What's the biggest misconceptions about storage investments, and what does Long Yards do to address that?
One of the misconceptions. I mean, people are just kind of worried, like, is it going to work? Right. And I always say, like, first of all, real estate's a generally safe bet. And then self-storage, I think it's like a 93% success rate. And we merged the two of them, so some people are still like, is it safe? So the misconception is just worry. And I try to navigate them through. It's like, hey, look at my property, cash flowing, and this is a stable asset class, iOS, self-storage. So just showing them the data and the history helps a lot with that.
So for the listeners out there who are considering this, maybe they have that piece of land in mind, or it's hit them a couple times. Maybe the beauties of marketing, maybe they've even seen you somewhere before. Like, all right, let's do this. What kind of advice would you have to them to take those first steps?
Well, the first step is simple. It's like, it's $5,000. Reach out if you want to dip your feet in and learn underwriting. We teach you, we introduce you to an agent. We give you what's called our acquisition assembly line, our checklist. So it's not like an overwhelming, it's not like traditional franchising. It's not like here's $50,000, you're on your own. It's like, no, this is $5,000. Show us you're serious, and let's get to work and partner with you. And then we really take you into the inner workings, and we're literally teaching you commercial real estate. We're teaching you underwriting, seeking capital, the executive summary that the bank's going to require. So there's so much to learn, but it starts with some sort of investment in yourself. And we like to draw the line in the sand and be like, that's 5,000, and then you're with us. And that's it. I mean, we created that way to put a line in the sand between people that are serious and not.
And what's the best way that they connect with you, or what platform do they use to say, okay, this $5,000, it makes sense. I'm ready to invest that in me to partner with you. How do they get in touch with you?
Oh, just go to longyards.com, fill out one of our forms, and we'll reach out. And there's a questionnaire. Just go through it. And then we book a Zoom call at the end of the questionnaire.
Perfect. Sounds easy enough. And you definitely still have the Canadian accent too. Every now and then those words slip in there and it's like, oh yeah, that's it. I was watching, I can't remember what show. It's anytime I hear like an Australian accent, they have very unique. There's almost like anytime there's an O, there's an R connected to it. And it's or like this, there's a connection to it. But for me, I'm sure I sound funny too to a lot of people, but it's so funny. It sounds great though. It's awesome. Yeah. So where do you see the future of the storage industry heading in the next 5 to 10 years?
Well, for storage yards, I definitely see it expanding. I think it's going to catch the eyes of institutional players. More money is going to start coming into it. You see Altera and Zenith. I think Altera is up to $1 billion fund, and all they're doing is buying up iOS. So, and there's no value add. It's just like buy a piece of dirt. That's it, right? So we have a strong value add play. So I think more money and more players are going to flock to it. It's already becoming a bit of an acronym like iOS that wasn't there before. So I think just with time and more market familiarity, people are going to gravitate to it more. And we're already what I believe is a leader in the industry. So, we have a responsibility to educate people, just make sure they're making a safe investment, getting the right property, learning about it. And that's what we want to do.
Talking about educating me, when you use that acronym iOS, what is that?
Industrial outside storage.
Industrial outside storage. Awesome. My mind went to industrial office space. I'm like, how does that work?
Yeah, a lot of people hear that for the first time. They're like, huh? But then you talk to an industrial broker, it's just like slang.
Yeah, it's like iOS. Very cool.
Yeah.
So for real estate and investors, or real estate investors and entrepreneurs looking for that next big opportunity, what's one piece of advice you'd give them?
Take your time. Biggest advice would be just, trust but verify. So, if everything looks good on the surface, do your own homework, do your due diligence, make sure it checks out. At the end of the day, you're signing on the paperwork, and you just want to make sure that you feel good with it all. And that's why we so strongly believe in education. But yeah, I would say trust but verify.
Perfect. It's been a great conversation. Congratulations, by the way, on the wife, the 3 kiddos, holding that together. And that's got to be a challenge, not only moving countries, but also with the businesses. I know personally that's a challenge, especially when you've burnt the ships. And not only now you have your family, you've got other families that depend on you too. So congratulations on your journey so far, Chris.
Thanks, man. I appreciate that.
Awesome. Well, thanks for coming, man. We'll have all of this stuff on the in the description for the guest as well. And it's longyards.com. That's the best place to get a hold of you, right?
You got it.
Perfect. Another great conversation here today on the Real Estate Mogul MD. Thanks again to Mr. Chris Long laying it down. Here's some notes I dropped in the bucket today. Real estate opportunities exist in unexpected places. Industrial outdoor storage is one of them. Investing is all about education. Trust, but verify before jumping in. If you want to scale in business, the right partnerships and systems make all the difference. If you're interested in learning more about the opportunities in storage and real estate, check out longyards.com. Give a shout to Chris. Thank you again for giving us a listen here today. This is the Real Estate Mogul MD.